Most traders think being right about market direction is enough. Jesse Livermore, who turned $10,000 into millions multiple times, learned the hard way that being right means nothing if your timing is wrong. In 1906, he correctly predicted one of the biggest bear markets in history, and went broke anyway. Today you'll learn his three-phase precision timing system, the exact methodology that separated his winning campaigns from his devastating losses. This isn't about prediction, it's about precision. Drop a comment right now. What's your biggest challenge with timing your trades? Picture this. Jesse Livermore, 27 years old, sitting in his broker's office in New York. He's just made a fortune on Union Pacific. His confidence is sky high. And as he studies the economic landscape, he sees something that terrifies him and excites him. The Boer War had burned through millions. The San Francisco earthquake had destroyed actual wealth. Money was scarce everywhere. The railroads were desperate for capital. Livermore looked at all this and reached an ironclad conclusion. A devastating bear market was coming. Here's where most traders, even smart ones, destroy themselves. They see the iceberg ahead and immediately start betting against the ship. It seems logical, doesn't it? You've done your analysis. You know what's coming. The market is still near its highs. So you sell short aggressively, confident that your superior insight will be rewarded. You think to yourself, I see what others are missing. I'm ahead of the curve. This is my edge, but this is backwards thinking. Livermore learned this lesson with brutal efficiency. He was right about the bear market. Completely, utterly right. But he started selling months too early. And what happened? Rally after rally wiped out his margins. He went broke being right. The professional's paradigm shift. Think of the market as a massive ocean. You're a ship captain, and you can see a powerful storm approaching on the horizon. The amateur captain immediately turns his ship around and starts sailing against the current, trying to profit from knowing the storm is coming, but the tide is still flowing in the opposite direction. He exhausts his fuel fighting the current, and when the storm finally hits, he's got nothing left. The professional captain does something different. He sees the storm coming. He positions his ship. But he waits, watches the ocean carefully until the tide actually begins to turn. Then and only then does he set his sails and ride the new current with maximum force. Livermore developed what I call the three-phase precision timing system. It wasn't enough to be right. He had to be right at the right time. Phase 1, the vision. See the iceberg, you must see what's coming before the crowd does. This was Livermore's analytical foundation, the ability to read underlying conditions, not just price action. But vision alone is worthless without the discipline to wait. Before you ever place a trade, you must diagnose the fundamental conditions of the market. Think of yourself as a ship's navigator, studying weather patterns, ocean currents, and seasonal changes. You're not guessing about tomorrow's weather. You're identifying the massive forces that will drive market direction for months to come. Livermore studied the money supply, railroad financing needs, global economic destruction from wars and disasters. He was looking at the ocean itself, not just the waves on the surface. The market's primary trend is determined by these underlying conditions, and they are the most powerful forces in play. Here's where most traders shipwreck themselves. They confuse seeing the future with being ready to trade it. You analyze the fundamentals, reach a brilliant conclusion, and immediately start trading based on that conclusion. It seems smart because you've done the work. You've achieved clarity while others are confused. You think to yourself, I know a bear market is coming. The stock market is still high. Therefore, I should sell short now and maximize my profits. But this is the thinking that destroyed Livermore's account in 1906. He saw the bear market coming, saw it clearly, months in advance. He was intellectually correct, and he was financially destroyed. Why? Because he confused the destination with the journey. The amateur acts on vision. The professional waits for confirmation. The professional does something that requires immense discipline. They separate analysis from action. Livermore learned to identify the conditions that would drive the market down, but then he waited. He watched. He refused to act until the market itself confirmed his analysis. Think of it this way. You're a ship captain who sees storm clouds gathering on the horizon. You don't immediately sail into the storm. You prepare your ship, you position yourself, you stay alert. But you wait for the wind to actually shift direction before you adjust your sails. The path to extraordinary results is through confirmed timing, not premature action. Livermore wasn't interested in being theoretically right. He was focused on being profitably right, and that meant waiting for the market to prove him correct before committing capital. Let me show you exactly what happened. In the summer of 1906, Livermore analyzed the economic landscape. The Boer War had destroyed wealth. The San Francisco earthquake had caused massive losses. Money was scarce. The railroads needed capital desperately. He concluded, devastating bear market ahead, so he started selling short, aggressively. The market went down, then rallied. He sold more. Another rally. Every rally chewed through his margins like a shark through bait. For months this pattern repeated. He was right about the direction, but the market wasn't ready yet. One rally after another cleaned him out. There I was, he later wrote, right and busted. He had sprinted toward a pile of gold he could clearly see in the distance. But the distance was farther than he thought, and he collapsed before reaching it. His analytical vision was perfect. His timing execution was catastrophic. This single sequence of trades taught him the most expensive lesson of his career. Vision without confirmation equals destruction. But seeing the future means nothing without the next critical element. Because even if you have perfect analytical vision, even if you know exactly what's coming, you can still lose everything if you miss the confirmation signal. This is where most traders fail. Phase 2. The confirmation. Wait for the tide to turn. The market must confirm your analysis with unmistakable signals before you act. This was Livermore's hardest-won lesson. The difference between bankruptcy and millions wasn't his analytical ability, it was his willingness to wait for proof. After you've identified the coming trend, you must wait for specific, concrete signals that conditions are actually changing. Think of yourself as that ship captain, watching for the tide to turn. You don't guess when it's turning. You watch for unmistakable evidence. The current shifts. The wind changes direction. The waves begin moving the other way. For Livermore, confirmation came in the form of desperate actions by major institutions. When the most powerful banking houses in America started doing unusual things, that was the tide turning. That was permission to act. Not before. Here's the killer. After getting burned once, most traders overcorrect. They see the danger of acting too early, so they become paralyzed, waiting for absolute certainty that never comes. Or worse, they ignore obvious confirmation signals because they're gun-shy from previous losses. The amateur either acts on hunches or waits for perfection. Neither works. You think, last time I was too early, so this time I'll wait until everyone else sees it. But by then, the opportunity is gone, or you think, I've been burned before, so I need absolute proof. But markets never provide absolute proof. They provide sufficient evidence, and sufficient evidence requires interpretation, courage, and conviction. The amateur doesn't know what confirmation looks like, so they either ignore it or miss it entirely. The professional develops a specific checklist of confirmation signals and acts decisively when they appear. Livermore's breakthrough came when he stopped trying to predict the exact moment and started watching for institutional behavior. In October 1906, he saw something extraordinary. Great Northern and Northern Pacific Railroads announced new stock issuances with payment on the installment plan. This was unprecedented. The most powerful railroads in America, backed by the most powerful bankers, were so worried about money supply that they let investors pay over time. Think of it this way. The ocean current was so obviously shifting that even the biggest ships were struggling. This wasn't a guess. This was a signed confession from the institutions themselves. Then St. Paul Railroad announced its own issuance, but moved the payment date ahead of the others. They were racing to grab money before it disappeared. This was the wind shifting. This was the tide turning. This was confirmation. When Livermore saw those railroad announcements, everything clicked. He told his broker, Ed Harding, "The time to sell is right now." This is when I should have begun. He pointed to the Great Northern advertisement, payments on installment. The bankers are confessing they're worried about money supply. If they're worried, what do you think is coming? Then came the St. Paul announcement, with payments scheduled before the other railroads. St. Paul is trying to beat the others to what little money exists, Livermore said. They're not being polite. They're desperate. This time he didn't sprint, he walked. He sold Great Northern preferred around 3:30. He built his short positions carefully, watching the tape, timing his entries. The stock eventually collapsed 60 to 70 points. The difference? In the summer, he had vision without confirmation and went broke. In the fall, he had vision plus confirmation and made a fortune. Same analysis, same market, completely different outcomes. The only variable was timing discipline. But confirmation alone still isn't enough, because once you receive your signal, once the tide has clearly turned, you face the final and most psychologically difficult challenge of all: maintaining your position through the storm. Phase 3, the execution. Ride the current with discipline once. Positioned correctly, you must maintain discipline through inevitable counter-trend rallies. This is where Livermore's tape-reading skills combined with his strategic patience. Being right at the right time means nothing if you abandon ship during temporary squalls. After you've taken your position based on confirmed signals, you must distinguish between minor counter-trend movements and actual trend reversals. Think of yourself as a captain riding a powerful ocean current. Small waves will push against your ship, that's inevitable. But the underlying current is still carrying you in the right direction. Livermore learned to use his tape-reading ability not to chase every wiggle, but to verify that the major trend remained intact. Short-term rallies in a bear market are like waves going the wrong way. They're surface noise, not the deep current changing direction. This is where psychology destroys most traders. You've finally positioned yourself correctly. You're making money. Then comes a sharp rally that turns your profits into losses. Panic sets in. The amateur does one of two things. Either they abandon the position, taking a loss on what would have been a winning trade, or they stubbornly hold through a genuine trend reversal, turning a winner into a disaster. You think, this rally is killing me. Maybe I was wrong. Everyone's saying the bottom is in. The smart money is probably covering. Or you think, I'm right, so I'll hold no matter what happens. Both approaches are driven by emotion, not analysis. The amateur can't distinguish between a temporary counter-rally in a bear market and an actual trend change, so they either exit too soon or hold too long. The professional uses their analytical framework to evaluate each rally. Is this rally violating the conditions that created my position? Or is it simply a temporary squeeze that will exhaust itself? Livermore developed a mental checklist. Has the money supply suddenly improved? Have the fundamental conditions changed? Or are the banks simply trying to squeeze the shorts to reduce their own pressure? When friends warned him about rallies and squeezes, he thanked them politely and did nothing. Because the underlying conditions, his true allies, hadn't changed. The ocean current was still flowing in his direction, even though occasional waves pushed against his ship. He famously refused to sell Reading initially because it was cornered, but when he analyzed the situation, he realized the pool couldn't hold it once money tightened further. He sold it anyway. It collapsed. During his 1906-1907 bear campaign, Livermore faced constant pressure to cover his shorts. After each rally, people told him the bottom was in. The big fellows are going to squeeze you, they warned. He had one friend who was particularly agonized. This friend understood hunches and single stock tips, but couldn't grasp predicting that the entire market would fall. How can you be so sure? He kept asking. Livermore's response captured his entire philosophy. First they sink to the bottom. Then they come up. But not right away. They've got to be good and dead a couple of days. It isn't time for these corpses to rise to the surface. They are not quite dead yet. He held through rally after rally because his analytical framework told him the underlying conditions hadn't changed. By February 1907, he had cleaned up. Great Northern Preferred had dropped 60 to 70 points. Other stocks fell proportionally. He made a fortune, not from being right, but from being right with proper timing. But here's what separates the genius from the merely smart. Livermore knew when to exit. In February 1907, after the decline had run its course, he covered everything and went to Florida. He didn't try to squeeze every point. He recognized that the decline had discounted the immediate future. He had learned his lesson from before. Don't trade in and out of season. When conditions aren't right, don't trade. When they are right, act decisively. When they've played out, take your profit and wait for the next perfect setup. Let's bring this complete timing system together. Livermore's genius wasn't in any single phase. It was in the integration. The three-phase precision timing system is a complete methodology that transforms speculation from gambling into systematic business. It begins with Phase 1, the vision, see the iceberg. You analyze underlying conditions, money supply, institutional behavior, fundamental economic forces. This gives you directional conviction. You know what's coming. But you don't act yet. It moves to Phase 2, the confirmation, wait for the tide to turn. You watch for specific institutional signals that conditions are actually changing. Railroad stock issuances on installment plans. Desperate competition for scarce capital. The market itself confessing what you already know. Only when you have confirmation do you begin building your position. It narrows to Phase 3, the execution. Ride the current with discipline. You maintain your position through counter-trend movements by constantly evaluating whether underlying conditions have changed. Surface rallies don't shake you loose because you're anchored to fundamental analysis, not price action. This is not a pattern recognition system. It's a disciplined methodology for synchronizing your analysis with market timing. Here's what this really means. The 90% who fail see a coming trend and immediately act on it. They're driven by impatience and ego. They see a bear market coming and start selling at market tops, getting destroyed by rallies. Or they see a bull market starting and chase it after it's already run. The 10% who succeed see the same trend, but they wait for confirmation. They have cultivated the discipline to separate vision from action. They see the same market conditions and think, I know what's coming, but I'll wait for proof before committing capital. This system transforms speculation from a guessing game into a scientific business. It is a methodology that aligns analytical correctness with execution precision. You can be the smartest analyst in the world, but without timing discipline, you'll die broke being right. Now let me be clear, this is not easy. Livermore himself said, if I had gone broke a little while before because I had seen this break too soon and started selling before it was time, even he struggled with this. Knowing what to do and having the discipline to wait are two different universes. This system will not make you rich overnight. What it will do is prevent you from going broke being right. It will help you align your brilliant analysis with proper execution, but only if you have the discipline to wait for confirmation signals, even when you're certain you know what's coming. Most won't. Will you? So here's my challenge to you. Look at your current market view. Do you have strong conviction about where things are headed? Good. Now ask yourself, what would confirmation look like? What institutional signal, what behavioral change, what concrete evidence would tell you it's time to act? Write that down. Make it specific. Don't just watch this video and go back to trading on hunches. Livermore spent thousands of dollars and went broke multiple times learning these lessons. You just got them in 15 minutes. The question is, will you have the discipline to apply them? If you're serious about understanding Livermore's complete methodology, you need to read Reminiscences of a Stock Operator by Edwin Lefebvre. This isn't just a trading book. It's the psychological education of a master trader, told through real wins and devastating losses. Link in the description. And for those who want to see how legendary traders handle risk management, watch this video next on Livermore's position sizing rules. If this changed how you think about market timing, hit that like button. Subscribe for more deep dives into legendary trading strategies. And drop a comment. Which of these three phases, vision, confirmation, or execution, is your biggest challenge? I read every comment. Remember, this video is for educational purposes only. This is not investment advice. Livermore's strategies require study, practice, and immense discipline. Always do your own research, and never risk more than you can afford to lose. The market can remain irrational longer than you can remain solvent.